Hello friends, I'm Vishwanath Desika and this is the final accounts practical question number 1, and it is also having nearly 9 adjustments we are having, right? We can discuss the problem. We have to practice little bit more this illustration number 12 as well as the practical question number 1. We need to take it more carefully. Very important problems, not according to exam point of view but knowledge point of view. That is very important questions. Illustration number 12 and also the practical question number 1, right? Let us now start with the practical question number 1. Let us read the values which they have provided for us. From the following particulars extracted from the books of Ganguly prepared trading profit and loss account and balance sheet at 31st March 2020. After making the necessary adjustments, so we have 9 adjustments nearly. We shall see, look at these adjustments and we can directly go through the problem, right? And as they have asked us to prepare trading profit and loss account and also the balance sheet required, I have already drawn the performance for this and I have written the heading working notes so as to solve the problem with the help of working notes, right? Now let us go through the problem. First let us see the adjustments so that we can comfortably go. And what we do here is, after looking at the adjustment, we shall interpret that in trading P&L and balance sheet. That is what we need to do as soon as possible so that we may not lose any marks for these adjustments, right? uh, Let us now see first thing, which is the value of closing stock as on 31st March 2020 is 3,93,000. So this is the closing stock. This includes goods returned by customers on 31st March 2020 for the value 15,000, for which no entry has passed into the books. Simply, no, not working notes is not required for this. The entry for which the goods have been returned by the customers has not been recorded, so that is incorporate that sales returns account at to customers account. Customer is what data we can have. Customer account at customer sales returns account at to debtors account. This is what sales returns, right? That means what we need to deduct the debtors by rupees 15,000 and we need to increase the sales returns by 15,000. This is what we need to do. So here in this Sunday debtors we are going to highlight this point, and also sales returns we are going to highlight here, right? So that there is nothing left, right? We should not leave any point, single point, right? So what we do here is, as this is a closing stock adjustment, we shall incorporate that closing stock adjustment and we shall have the balance of trading account up to this place. This would be sufficient for the trading account. Trading account is very small, but that is what we are going to have large values. And here we are going to write by closing stock 3,93,000. And in balance sheet also let us write the same values. So here we are going to have the total of the balance sheet. So here I am writing closing stock, so 3,93,000, right? This is what the first adjustment, but in which there is also one more thing, which is sales returns to debtors. We need to deduct the debtors account, so for which we are going to prepare the working notes for the debtors and also the provision we are going to have in the adjustment. I suppose last or something else it is. Yeah, last adjustment. Let us go for the next thing. Purchases includes furniture purchased on January 1st, 2020 for rupees 10,000. What happened here? There is a furniture purchased for which we should incorporate the entry furniture to bank furniture account data to bank account, which is 10,000 rupees. But what we have recorded the entry that purchases account data to bank account. This is what we have done in the entry. Purchase includes, that means what we have treated this furniture purchase as normal purchase, goods purchase for rupees 10,000. So what we need to do, this is the correct entry and this is the wrong entry. So we need to pass rectification into it. That means reversal of wrong entry and merge with the correct entry. That is furniture account data to purchases account. By 10,000 rupees, we need to increase the furniture and we should decrease the purchases by 10,000. So let us highlight this purchases and also let us highlight the furniture. Yet, no problem. Here they have given us that this furniture has been purchased on 1st January 2020, right? So what is our financial year for up to now? 1 second. 1st April 2019 to 31st March 2020, right? This is our financial year. But what happened? We have purchased this asset on 1st January 2020, that is on 1/1/2020. That means what? Before the closing of 3 months, we have purchased an asset. So if any depreciation is to be charged for the assets, for the furniture and fixtures, or simply furniture, then for the opening balance, which is 9,000, we need to pass a total depreciation. That means total for 12 months we need to depreciate, and for this 10,000 we need to depreciate for 3 months. How we can show? Let us have here furniture account, right? Let us see in the balance sheet. Furnitures, we are having the balance of furniture 9,000 rupees. I'm erasing this one so that there is nothing distracted, right? 9,000 rupees is the opening balance of furniture, and we need to add a transfer from purchase by 10,000 rupees, right? This is what we need to have, and if there is any adjustment regarding depreciation, we are having, see, depreciation to be charged at 10% per annum. Very complete. Actually, this is completed, right? And we need to deduct that. We need to increase the sales returns and we need to deduct the debtors. We shall see in the adjustment. We shall see that in the working notes. Okay. So this is what total of 19,000 rupees. Now we shall go for the help of the calculator. With the help of the calculator, we can see what will be the depreciation value for 9,000 rupees. Actually, what the rate of depreciation is provided, they said the 10% per annum, right? That means what? So we need to deduct depreciation. In bracket, I am writing 900 rupees for 9,000 asset. 9,000 into 10% is 900, right? And for this 10,000 we need to depreciate with 10% for only 3 months. That means what? For which only 250 rupees is going to be charged 1150. We need to deduct that one. So 10,000 plus 900. So 19,000 minus 1150, which is 17,850 rupees. How we got this 250? Simply we purchased 10,000 worth of an asset at the end of the year, that is on 31st March 2020. The rate of depreciation be charged at 10%, but we have used the asset from 1/1/2020 to 31st March 2020. That is exactly for 3 months only. So we need to depreciate for only 3 months. If we calculate by the help of the calculator, we'll be getting 250, and for this 9,000 into 10%, which is 900 rupees, which is 900 rupees. That is what we can have, and this is the value of depreciation, right? So we can debit to profit and loss account here. to depreciation account, not account, no need of account here, to depreciation 1150. That is what we have found. So now we have completed these three adjustments and we shall go for the fourth one. Very important for this. They said that the loan account from Dena Bank in the books of Ganguly appears as follows. So this is the loan account. What happened here? At the beginning of the year, that is on 1/4/2019, we had a balance of 50,000, and at the end of the year, we have taken one more loan. Okay, one more loan from Dena Bank by 50,000. So combinedly, there will be a balance of 1 lakh at the end of the year, right? But why they have given? Let us see. If we go for the adjustment number 6, okay, if we go for the adjustment number 6 here, what happened here? See, interest paid includes rupees 3,000 to Dena Bank. Interest paid includes rupees 3,000 paid to Dena Bank, right? But what is that here? Simply, let us see for the interest paid in the trial trial balance, right? Interest paid. Here we are having. So, interest on loan from Dena Bank. Interest on loan from Dena Bank, we are finding that in working notes, but actually paid is paid rupees 3,000. This is an expenditure, right? Interest is an expenditure. So overall expenditure happened for interest is 4,500, in which rupees 3,000 is interest paid to Dena Bank loan, right? But what is the total interest to be charged for a first fall, right? What happened here is they have taken the loan at the end of the year for 50,000, for which no interest can be charged. This interest can be charged in the next year, that is on 31st March 2021. But there is opening balance of 50,000 rupees only. There is opening balance of 50,000. So we need to charge interest for this 50,000 rupees only. Let us have here. See, loan from Dena Bank account, Dena Bank Limited, in bracket they said 12%. What is this 12%? 12% is the rate of interest, and this is what 1 lakh rupees. We have taken loan for which interest is payable at the 12%, and the balance of loan is 1 lakh. But we need to charge interest only for this 50,000. Let us see. Interest on loan actually. Loan what we can have here is 1 lakh, not 1 lakh, I'm sorry, 50,000, right? 50,000 into 12%, this is what we need to calculate. What is the value of 50,000 into 12%? Which is 6,000. This is what interest on loan which is actually to be paid. But interest on loan paid, which is 3,000 rupees only, right? Interest on loan I'm specifying. So that is what 3,000 rupees. Then what is this remaining 3,000? Remaining 3,000 is payable. If we less here, interest on loan paid already, the remaining rupees 3,000 is outstanding interest on loan. This is what outstanding interest on loan we are having. Okay, interest on loan is a liability, so this is to be added to the interest paid and it is to be shown as current liability in balance sheet. Let us see. Outstanding liability, right? Outstanding interest on loan, 3,000 we have calculated. This is outstanding, and loan from Dena Bank we can write it here, which is 1 lakh rupees, which we have seen just now. right? That means what we have included, we have written this one also, we have completed this furniture, right? And now in here, what we can have here is to interest. I am writing at the beginning so that the space should not be wasted, right? To interest, 4500 is the interest which we have seen, right? Interest paid is always written in debit side, right? To the interest plus outstanding interest, we can write outstanding rupees 3000. So total we need to debit by 7500 rupees. So we have seen this adjustment also. Interest paid completed. Interest paid includes rupees 3000. That adjustment is also been completed. This is an information for this adjustment number 6 and also adjustment number 8, right? Adjustment number 8 is nothing. There is nothing to be done there. Adjustment number 8 is just for sake. No need to see that one. See, provide for interest payable to Dena Bank and for interest on interest investments and deposits. Nothing there is, right? There is nothing here. Okay, no need of seeing that adjustment. But they have given us that interest to Dena Bank and also for investments and deposits. Then we can understand that there may be some adjustment regarding investments and deposits also, right? Now what we can see here, we have completed this fourth adjustment also, right? Fourth, sixth we have completed. We can read that eighth also been completed, fourth completed. Now we can go for fifth adjustment. See, this is a simple adjustment. Sundry debtors include rupees 30,000 due from Robert and sundry creditors include rupees 10,000 due to him. That means what? We are having a debtor and as well as creditor, and the name is Robert, right? In debtors list we are receivable from him is to 20,000 and to Robert we are payable by 10,000 rupees. Then what we can say? Simply, if we can set off this least amount of rupees 10,000 which is payable to him, then we can say that Robert is our debtor by rupees 10,000, right? We can say that Robert is our debtor by rupees 10,000. Then it is not required to record this creditors by rupees 10,000. That means if we deduct this debtors value by rupees 10,000 and if we deduct this 10 creditors by 10,000, then we can set off this adjustment. That is what we have studied, the adjustment which is set off, for which the entry is creditors account debtor to debtors account. And I have already informed you that least amount is to be set off from the given list of the values. This is what we have to do. That means we need to deduct the creditors by 10,000 and we need to deduct the debtors by rupees 10,000. And we need to take it very carefully. What we do is, now we shall go for sundry creditors, right? Sundry creditors 74,000 that we have to record in balance sheet. Sundry creditors 74,000 we have to write and minus set off Robert by rupees 10,000. Remaining value is 64,000 we can record here. And now what we do is, we shall take the second working notes which is balance of debtors and provision for bad debts. Balance of debtors and provision for bad debts. Let us see. Balance according to trial balance. Let us see. Balance according to trial balance we need to see. Wait. Let us see. We have completed this adjustment and considering creditors also. Study debtors is 1,20,000. Let us have the 1,20,000 balance. Let me write it more clearly, nicely, so that there will not be anything. See, balance of debtors and provision for bad debts. debtors balance according to trial balance 1,20,000. This is what we are having from the trial balance, right? And what we need to do here, I have already said that we need to set off this credit debtors also by 10,000. So less we can do set off, and Robert in bracket we can write set off Robert by rupees 10,000. We need to deduct this value, so I'm keeping in brackets, and also we need to deduct with the sales returns from customers. That is what first adjustment we have seen, right? 15,000 rupees. We need to deduct that value also. So 15,000 is the total value. Let us have the balance of things. 1,20,000 into 10 minus 10,000 minus 15,000, right? 95,000 is the balance. Friend, you have said that we need to calculate the provision for bad debts on the balance of debtors, right? That means we are going to think that we need to calculate the provision on 1,20,000. But if there is any adjustment regarding provision, we need to take more carefully, right? Let us see the adjustment number 9, the last adjustment, which is make provision for doubtful debts at 5% on the balance of sundry debtors. No such provision is to be needed for making the deposits, right? On the balance of sundry debtors, we need to calculate this 5%. I hope you got that one. So less provision for bad debts at the rate 5% on sundry debtors, which is 95,000 into 5%, which is 4,750, and we need to deduct this one, right? And the remaining is 90,250 rupees. This is what we can have. So if we are having the in trial balance, if we are having any provision for bad debts, and we need to compare that one now. Let us see for the provision for bad debts in the question, that is in trial balance. There is no balance of provision for bad debts. So what we can do now, we can directly debit this provision for bad debts to profit and loss account. Okay, let us debit to profit and loss account to provision for bad debts. 4,750, and we are having the total of balance of sundry debtors, right? So we can now show the debtors value directly. So sundry debtors working notes number 2, I suppose. Correct, 90,250. Don't worry friends, the place may be more here. I am writing in a format because in we are going to follow rigidity preference method, at which the fixed assets and current fixed, that means non-current liabilities are to be shown at the top, and borrowings and investments, anything deposits we can show in the middle of the balance sheet, and at the lower the thing we can show the current liabilities and assets. That is what we are going to find out, follow in rigidity method. Okay, that is what we have seen the sundry debtors. We have completed ninth adjustment, we have completed fifth adjustment also, only seventh adjustment is receivable. Only seventh adjustment is outstanding, right? Right, let us see. Interest received represents rupees 1,000 from the sundry debtors, and the balance on the investments and deposits. Let us see now. Interest received is 7,250, right? Interest received is 7,250, and we are having the bifurcation of rupees 1,000. and 6,250 rupees. This is what we have received from sundry debtors not required in sundry debtors account, but and remaining 6,250 is interest on investments and deposits. This is what we can see. Let us now go for the third working notes. Interest on investments and deposits. Total interest to be received. Here I am writing investments because we have given separately. Investments separately and deposits also we have separately. Right? Investments, what is the amount of interest to be received, and deposits also what is the amount to be received. Right? Let us see. In here we can see that investments at 5% on 25,000 rupees. So the investments have been taken on 1 for 2018, that is at the beginning of the year. Then we can charge full interest. We can take the full interest from the company, right? So 25,000 into 5%. Let us see now. 5% is the interest for 25,000. Let us have here. So 25,000. It rate 5% rupees, right? Let us calculate 25,000 into 5%, which is 1,250. This is what total interest to be received on investments. Let us now go for the deposits. The deposits we are having here, right? See, deposits at the 10%. 10% is the rate of interest, and we have taken these deposits on 1 for 2018 at the beginning of the year, right? As on means the balance is there here. 1,50,000 we are having. Let us have the 1,50,000 rupees. So 1,50,000, and we are having the interest rate at the rate 10%. That means 15,000 is the total value, right? Total we can have here 16,250 rupees. But we need to deduct less. I am writing less interest actually received 6,250. Now we have seen that one. That means what 10,000 is receivable or accrued interest, we can say. Accrued interest is 10,000. Accrued interest, accrued income is in what is what we can say. It is receivable, right? That is a debt asset side. So what we know is let us write investments at the rate 5%. This is what interest, but we are writing the value of investments, which is 25,000 rupees, right? 25,000 rupees. Interest should not be added to these investments, that is separate value. And we are also having deposits 10% in bracket I am writing. So let me write this investments in 10 bracket only. So deposits 15, 1,50,000. And now accrued interest, working notes number 3, I suppose, right? What is that one? 10,000 rupees is there. So we need to add this accrued interest, which is receivable, right, in the credit side of the profit and loss account. What we do is by interest received, which is 7,250, which they have given us. What we do is we shall write it somewhat down. By interest, which is 7,250, and add outstanding or accrued 10,000 rupees is there, right? So 17,250 is to be shown in the outer column. So we have bifurcated. That's it. We have not deducted that 1,000 rupees there. In this total of 7,250, 6,250 belongs to interest on investments and deposit. That is what we need to understand from that adjustment. So with this we can say that we have completed the adjustment also. We have completed all the adjustments. Now what we do is we shall erase all these things and we shall take down what we need to do. We need to deduct the sales returns value and I think we have taken the adjustment in debtors, right? We have taken the adjustments in debtors. And now simply we need to follow the trial balance. What is to be done? Let us now take the things which we have completed. Um, Loan from Dena Bank completed, sundry debtors completed, sundry creditors completed, investments completed, interest received completed, deposits completed, right? That is the thing which we have seen up to now. We have completed all the adjustments. Now we shall check into the trial balance items. Very simple and easy to do the trial balance. And in the first thing they have provided us the capital balance 5,40,500. So capital 5,40,500 rupees. We have completed this one. Let us take that one. Right, and stock on 1/4/2018 opening stock 2,34,000. We can write it here to opening stock. 2,34,000 rupees. Right, we have completed this one also. And now we are having sales for 10,48,000. Buy sales we can have 14,48,000 and less returns. In bracket what we do is let us have here sales. We have completed sales and in sales returns we need to add that sales returns by rupees 15,000. Right, we need to add the sales returns by 15,000 rupees. So in bracket what we do is 43,000 plus 15,000 rupees. Right, 43,000 plus 14,000 which is 58,000. We need to deduct with 58,000 rupees here. Plus or minus plus 14 lakhs 48,000 which is 13 lakhs 90,000 outer column. And we have already taken this adjustment in debtors also, right? We have completed sales and sales results. Now we are having purchases. Two purchases 12 lakhs 15,000 open outer inner column. Two purchases. Two purchases how much? 12 lakhs 15,500. Two purchases 12 lakhs 15,500 and we need to deduct what the amount which we have taken for purchases of furniture by 10,000 rupees and we need to deduct that one first. Transfer to furniture by 10,000 rupees, we need to deduct that one, right? And also we need to deduct purchase returns, right? What is the purchase returns value? 29,000 simply. So we need to write the outer column here 12 lakhs 15,500. 12 lakhs 15,500 minus 10,000 minus 29,000, right? 11 lakhs 76,500. 11 lakhs 76,500 is the thing and we need to write it here too. We have completed purchase returns, carriage invoice, direct expenditure 93,000 rupees. To carriage invoice 93,000 rupees and the remaining will be to gross profit. We can find out this gross profit value and we shall record it here, right? Let us see. And I think there will not be any direct expenditure. Completed carriage invoice, right? Rent we are having 28,500. To rent 28,500. Salary is 46,500. To salary is 46,500. Next, we have completed the salaries also. Now we are having printing and stationery 17,000. Seventeen thousand is the printing and stationery, right? Next advertisement 56,000 to advertisement 56. To advertisement 56,000, right? Completed. Now we can go for interest receipt. Completed. We have written all the things. Cash with Traders Bank Limited. Cash at bank we can have at the end of the things. Cash at bank. We can have this cash at bank value 40,000. Discounts received. By discount received 14,950. By discount received 14,950 rupees. And we have completed this interest investments, right? Furniture is there. Furniture at on 1 for 2019 completed. We have completed this one. And discount allowed 37,700 rupees. To discount allowed 37,700 rupees. We have completed this discount allowed. And general expenses 19,600. To general expenses 19,600. And next one is what? To audit fees 3,500. And next we are having to fire insurance premium. To fire insurance premium which is 3,000 rupees. And traveling expenses 11,650. To traveling 11,650. 11,650, right? Let us have. Next one. Postage and telegrams 4350. Right, we have completed this postage and telegrams. And cash in hand 1900 rupees. Cash in hand 1900. Completed now. Now drawings we have to deduct from the capital minus drawings. 50,000. Let us have. Yeah, 50,000. That is what we need to deduct. And now what we do is we shall see if there is an adjustment missed out. We have taken this 15,000 value in first thing. Purchases includes completed, depreciation completed, loan completed, sanitary set of adjustment completed, 3,000 completed, 1,000 that is 7,250 adjustment is completed. Provide for interest, no problem, not taken that one. Provision for doubtful debts at that 5% that is to be made completed. Now we have taken all the things. And now what is the remaining thing is calculation of gross profit. And from the gross profit we need to deduct the, we need to calculate by net profit. To net profit, that is net profit we need to calculate. And at the end of the thing, balance sheet is to be done. There is no do. Very thing is to be fastly it is to be done. But carefully, 13 lakhs 90,000 plus 3 lakhs 93,000, 17 lakhs 83,000 minus 2 lakhs 34,000 minus 11 lakhs 76,500 minus 93,000, which is 2 lakhs 79,500. Okay, this is like 2 lakhs 79,500 and plus 2 lakhs 79,500 plus 17,250 plus 14,950, which is 3 lakhs 11,700, right? And minus, we need to do all the things here. Minus 7,500 minus 28,500 minus 46,500 minus 17,000 minus 56,000 minus 37,700 minus 19,600 minus 1150 minus 4,750 minus 3,000. One second, friends. 3 lakhs 11,700, right? And minus 7,500 minus 28,500 minus 46,500 minus 17,000 19,600. I'm sorry, friends. 1 minute, I will do 3 lakhs 11,700 minus 7,500 minus 28,500 minus 46,500 minus 17,000 minus 56,000 minus 37,700 minus 19,600 minus 1150 minus 4750 minus 3500 minus 11650 minus 4350. 73,500 we have got. Two net profit we can have 73,500. Let me check it once again by adding all things. Plus 4350 plus 116. By checking 3 4 times we will not be losing any marks, right? Plus 3,000. So I have taken 3,000 extra, so 70,500 will be the answer. Plus 4,350 plus 70,500. 3 lakhs 11,700. Now we need to add here net profit. 70,500. What is the value of remaining things? 5 lakhs 4,500 minus 50,000 plus 70,500. 5,61,000 plus 1 lakh plus 3,000 plus 64,000. 7,28,000 is the total value. Let us subtract with the values of the assets. Minus 40,000 minus 1,900 minus 3,93,000 minus 90,250 minus 10,000 minus 15 1,50,000 minus 25,000 minus 17,850. Zero. Right. 7,28,000. So we have our balance sheet has been tallied. So we what we have done is very correct, very true. This is what for this video, friends, and thank you for watching. If you like my videos, please share my channel. Thank you very much. Bye.